Thank you very much, Jonathan. It's great to be in front of you all here today and talking about JGGI. By way of introduction, my name is Amit Palmer. I am an investment specialist who's dedicated to JGGI, and so it's always great to be out in front of investors or prospective interest and speaking about the trust. Now, I'm proposing to give a very quick high-level summary in terms of what we're looking to deliver for our holders, and then move on to actually just how we think about investing globally before moving on to some of our outlook and a review of the market, and then finally how we're positioned against this backdrop that we're seeing today. So within all of that, if there are questions, please keep them coming. I've been keeping an eye on the ones that the previous speakers have been having, and very, very interested to hear your thoughts. But as we're going through, JGGI, for those who aren't familiar, is JPMorgan's highest conviction global best ideas portfolio. And what we mean by that is this is a collection of, we say 50 to 90 holdings, but it's typically at the lower end of that range. About 50 to 60 holdings is really our sweet spot of our best ideas taken from around our global equity research platform from all of our analysts located around the world. And these are dedicated JPMorgan asset management analysts who are out there speaking with their sectors, speaking with companies within their sectors, within their regions, and arriving at what we believe to be differentiated forecasts for those companies. And this is a collection of those 50 to 60 top best ideas amongst that. The trust is about £3.5 billion sterling, so it's a sizable player within the markets as well. And it's really acted as a consolidator with other trusts. It's taken part in a series of mergers over the course of the last few years. And that's really been down to the scale that it's achieved, and also some of that performance that it's delivered over this period as well. In terms of from some of the characteristics that we're looking to deliver for any of our shareholders, this is, as mentioned before, a global best ideas trust. The dividend policy there in terms of both growth and income is to target 4% of NAV being paid out. And that's a fixed payment that we're delivering every year. So that's not entirely dictated by the organic dividend yield of the portfolio. Some of that will come from capital reserves. But the advantage of that is we don't compromise in terms of our stock selection. We can maintain a core style signature in terms of the overall trust structure. And we can invest across what we believe to be the best companies around the world, regardless of if they're paying a dividend or not. And that core element to the mandate as well very much delivers a style agnostic or all-weather portfolio built for all occasions then over the course of a market cycle. And we can touch on that as we're going through this. I mentioned before our analyst platform, and of course we have that network of 80 research analysts located around the world, on average 21 years of experience between them, an incredibly experienced group of individuals. But on top of that, a very, very experienced, highly experienced group of global portfolio managers at the helm of this as well. And so when you combine all of this expertise together, that's what we're looking to deliver in terms of that all-weather experience for any of our holders. And shepherding that is a very, very experienced team at the heart of it. So just for some of the key attributes then of the trust, I just wanted to share with you what we are looking to deliver. So performance there you can see on the left-hand side. Since this current management team has taken over the trust, it's outperformed by about 2%, and that's net of fees there. And that's against the MSCI All Country World Index, which is our chosen benchmark. Also on the right-hand side there, that's the Morningstar style plot. So that's dictating or breaking out the investment experience by both market cap and then investment style. So investment style going along the horizontal axis, market cap on the vertical axis. And you can see the waters we really fish in are that large to mega cap. And that's where our analyst coverage, that's where our research is focused. And from a portfolio management and portfolio construction perspective, it's very much focused in that core to slightly on the edge of core growth, slightly on the edge of core value, but very much sitting in the middle of that plot there as far as the experience we're delivering for any of our holders. A 5-star rating from Morningstar and overall ranked silver by that group there as well. So let's dive into just how we're managing the trust then in terms of a quick bit on process. And I promise I won't labor this in terms of what we're looking to achieve. But the first point I just wanted to present to everyone was the team at the heart of it. And this is led by a group of global portfolio managers. So all of the individuals represented on this page are global specialists within global markets. They're not dividing up the universe by US for some people and Japan for some people and then Europe for some people. Everyone here has a global remit. And in terms of the managers within the trust, it's really led by those three individuals at the top of the page there. So Helgi Skibelli, James Cook, and Sam Witherow. And the overall trust, we mentioned about 3.5 billion of assets, sterling. The overall book that this falls into is a strategy called Global Focus. And that's a much larger book of about 22 billion USD overall there. But they manage to the tune across these three strategies at the top of the page, around 90 billion in assets overall across the other franchises that we've mentioned at the top. Now, we're not big believers in having a star portfolio manager culture. That's not what we pride ourselves on. We really pride ourselves on having a rock star analyst culture. And so I'll spend a moment just describing what the research platform that we have in place. So I mentioned before, we have 80 analysts located around the world, split up and dedicated to their various sectors and their various regions around the world. So just to put into context for you, we have a European autos analyst, a Japanese autos analyst, a North American autos analyst. The same thing applies for the consumer staples sector. The same thing applies for the retail sector. You get the idea. And within that research platform, we're covering 2,500 companies overall. And that's incredibly powerful because we have near waterfront coverage from a fundamental research perspective of the entire benchmark, or near enough the entire large cap universe. And that's one of our key strengths there, is we have people speaking to these companies on a day-to-day basis. And there's two things I really want to get across here. We're very big believers in having career research analysts and all of our analysts using the same investment language. And what does that really mean for us? Career research analysts really means we employ people within this research platform with the aim of having them spend the duration of their career being in that seat as a researcher. We fully appreciate that those individuals who spend their time dedicated to their sector within their region, we don't view that as being a pathway to being a portfolio manager. If you're good at what you do and you enjoy your job as a research analyst, by all means, spend the duration of your career doing that. Our US semiconductors analyst has been in his seat for more than 3 decades. He has about 3.5 decades worth of experience himself. He will have seen the growth of the US semiconductor industry going from personal computing in the 1990s, going right the way through to mobile devices in the early 2000s, through to semiconductor content into industry in the 2010s, right the way through to today's AI revolution that we're seeing at the moment. And he can get in front of CEOs like Jensen of NVIDIA. He can get in front of these names and speak to them directly. And he's known them for multiple year periods of time. So he has that relationship with these companies, and he can look through just financial statements and have that dialogue with CEOs and CFOs and say, well, what's your strategy at the moment? Because your predecessor's predecessor was doing the same thing and it didn't work, for example. And that's really the power of this research platform. It's that expertise inherently that we house within it that really lets us arrive at differentiated stock outcomes. The other part I mentioned was having one common investment language. So regardless, and I mentioned this before, we have that specialization across sectors and across regions. Regardless of where you're sat, if you are part of the research platform, you are looking at companies in the exact same way as your peers. So if you are covering US semiconductors, and I mentioned it before, if you're our analyst out there, and if you're the European technology and semiconductor analyst then covering ASML, you are thinking about your sectors and you have the same research process to determine your output, your research output as one another. And likewise for our specialists out covering TSMC, likewise for our specialists covering SK Hynix, everyone is thinking about their companies within the broader context of the sector on a global basis. And so we like to use the term a local lens, but thinking globally. And that, again, for a global portfolio manager is especially powerful because you're not having to compromise in terms of listing location. You can look through that noise and just think about, is this the best business on a global basis overall? So that's a quick recap in terms of the research platform we've got. The final piece that I just wanted to leave you with is, well, I've mentioned 2,500 companies. How are we narrowing that down to just 50 to 60 of the best ideas around the world? And we employ a framework which we've designed internally. It's a proprietary framework called focus groups. And this helps us to construct the portfolio around not just sectors, but fundamental drivers behind companies. And the best way I can describe this is companies which behave similarly, regardless of where they're positioned in terms of regionally or within their sector. Companies which behave similarly are grouped together. And we've boiled our investment universe down to 10 of these focus groups overall, which we then manage the portfolio and construct the portfolio around to really look at the correlations behind these fundamental characteristics. And I'll revisit this in terms of when I'm showing you the overall positioning that we have within the trust at the moment. We like to see companies where there's valuation upside. We're not looking to overpay for companies. We're also not looking to bottom fish, but it's a good mixture between both growth and value attributes overall, but we're not looking to overpay for any of these companies, and that's down to the work our analysts are doing. We also look for a business where we have some sort of insight into what's driving that business on an ongoing basis, and we'll size our positions accordingly in terms of conviction behind that. And that's really how we arrive at this high conviction portfolio of best ideas then from around the world. And just overall, what I wanted to leave you with is, if you think about 50 stocks from a universe of 2,500 names, the hurdle rate for entry into the portfolio is incredibly high. There's only about 3% of stocks that we research actually making it into the final portfolio for the trust. So an incredibly high hurdle rate for entry. So moving away from the actual characteristics of the trust, well, what have we seen in the markets overall? And I can see already from some of the questions in terms of AI software impacts that we've seen, but I think it's worthwhile just touching on a couple of the key drivers behind 2025 and certainly some of the things that moved relative performance. There's a couple of things that I really want to highlight for you. This should be news to no one. It was an incredibly concentrated market last year, and US market leadership in 2025 was at its highest level. And you can see that on this chart over here, that broad leadership line when it's above that black line cutting across the middle. And you can then see that narrow leadership in terms of what really dictated returns in 2025. Market sensitivity, and the key driver of it was AI-led names, AI derivative names as well. Anything connected to that ecosystem within the US technology sector really was driving the market forwards. And for an active manager, quite candidly, it was a challenging time to be picking stocks when you had this narrowing down of market leadership within that. And being underweight to any of those names was especially painful for relative performance. Coming into 2026, though, we've seen some of that actually coming out and a reversal of some of those trends from 2025 and a much more fruitful environment for stock pickers overall. So it's worthwhile thinking about that broadening out of earnings recovery, not just worldwide, then going towards Europe and Japan and emerging markets, but also away from just Mag 7 going towards S&P 493. And that's also proved to be an especially fruitful hunting ground recently in terms of some of the stock selection that we're finding in opportunities. The other key attribute of 2025 was, and this links with the first point I raised about a narrow market, was momentum, and in particular price momentum really dictating returns. And this chart over here shows the performance of the Bloomberg US momentum factor overall, US momentum index overall, and how elevated it's been. Now, what that means is, in very simple terms, for fundamental stock pickers, such as ourselves, who are trying to look through the cycle and look at good quality companies driven by all of that work our analysts are doing, what investors were rewarding at the time was very much short-term revisions to companies and what they believe to be performing well on a very, very short-term basis. And for a long-term fundamental research process, this posed a challenge, but just in general for active managers, this was an incredibly difficult time then going into this environment. These momentum rallies that you've seen, they inherently will correct at some point, and you've seen some of the unwind of those momentum names coming forth on a year-to-date basis. But I think it's very worthwhile just thinking about how we've positioned ourselves against this backdrop, as I touch on positioning next. But I just wanted to get across that narrow market and that momentum rally that we've seen. So how's that really expressed itself from a valuation perspective overall worldwide? Now, valuations have been above their long-term averages, especially on a market cap weighted basis. Effectively, what we mean by that is it goes back to the first point. Market leadership has been incredibly narrow in 2025. We still see that market leadership being at an elevated basis today, but there are positive signs that it is coming through into other parts of the world and other sectors around the world now as well. And this gives us a great deal of encouragement that our fundamental research process is working much better now on a 2026 basis and opening up many of those opportunities, which we believe will be long-term winners across the market cycle for the future. So putting that together then in terms of what we've seen from the market, we're coming off a year of incredible market narrowness driven by price momentum, but the environment coming into this year is much more exciting for us as stock pickers on a global basis. So how are we positioned behind that? And this is why I touched on those focus groups earlier. I just wanted to represent the portfolio here, and this is relative positioning compared to the market across these focus groups. We are very, very balanced across these different cohorts of companies right now. There is no strong tilt in the portfolio, and you can see whether it's mega cap defensive technology companies, we call them the tech titans, we're about flat. We have a slight tilt to some of those silicon semiconductor names, we've called them silicon stars. We're about flat and even against those low growth defensive sectors, so infrastructure names, healthcare names, those very steady compounding style names, and slight underweight really driven from commodities and some of the industrial names in terms of those low growth cyclicals. And just to highlight that for you, we are believers that AI will continue to revolutionize how we're working and doing business at the moment. We've tilted the portfolio into some of those AI beneficiary sectors and some of those semiconductor exposed names. And we're also just ensuring we don't dictate all of the trust returns just from AI or semiconductor exposure. So we're very balanced beyond that. So no strong tilt within the portfolio to any one particular focus group that I outlined before. In terms of some of the stock positioning, what you can see here is a very eclectic combination of market leaders from around the world. And again, not dominated by Mag 7 names, for example. Yes, you've got a position there to Amazon, you've got Nvidia there, you've got Microsoft, but you've also got names like Charles Schwab, the US brokerage business, Safran there in terms of airplane engine renewal and maintenance. Exxon is in there as well. So this isn't a portfolio dictated by US technology. We've found plenty of opportunities across that sector spectrum, and this is really representing some of that leadership across that in terms of these different sectors and the areas we really want to access, whether it's chip proliferation, whether it's the franchisee business model from fast food, whether it's exposure to high quality energy companies paying good dividend yields and offering good generous share buybacks, or the renewal of aircraft and engines. We're representing some of these themes from across the board here. Finally, just in terms of some of the performance, of course, I mentioned before, very, very long-term returns have been positive for the trust overall since the team has taken over, and you can see that across 10 years and 5 years. It's come off a little bit in terms of on a one-year basis, but crucially, we're not investing just for the sake of a one-year time horizon. This is a portfolio designed to hold over the course of that market cycle, and we're very, very proud of those returns that we've delivered over this period. And of course, this again is an incredibly well-researched, competitive environment that we're actually looking to arrive at our stock selection from, and we have that research capability to do so. And you can see that from the calendar year returns we've generated really since this management team has taken over. So just some closing comments there. This is a global style agnostic best ideas trust overall, offering that 4% of NAV and delivering so in a very all-weather format. We've delivered returns ahead of the benchmark overall on that 5-year basis and since the PM inception. And we're really targeting the best ideas from this research platform that we utilize and distilling that down to about 50 to 60 best ideas from around the world, not compromising on growth or value. And we have a very experienced portfolio management team at the helm of that. The ongoing charge of the trust is 44 basis points. And that's for any of our holders. As it's grown over time as well and we've consolidated, that's come down for our holders there as well. So very, very competitive in that respect too.